Hey everyone, welcome back to Inkmattic. This is episode 71 of the Trading 212 portfolio update. It's been actually a really good week, if I'm honest. Portfolio is at £14,637.85p. So I've invested £12,090.34p, which I've invested around almost £900 this week. So the returns are now at £2,547.51p. That's 21.07% in the green. Yes, we've hit the 2,500 milestone. I'm absolutely thrilled. I guess the next one's $3,000. So if we look on the week, I was up around 17.27%, and now we're at 2107, which, I'm absolutely thrilled. In terms of free funds at the moment, I've got £634 of free funds in the account, which I'll be investing at some point. I did want to, buy a few more shares in the stuff that I've purchased this week. However, I do think it's a little pricey, and I'm just waiting for a slight dip or something, and then I'll invest it into it. So the stocks that I've purchased this week are Apple. So I've purchased a few shares of Apple, and I've got a total of 5.01 shares at the moment, which is worth around £435.16p. Average price is at $120, and I'm down 2.91%, and that's mainly down to the FX fee. So, it's something I'll be holding for the long run. I do think Apple is an amazing company. They're very innovative. And, I'm a huge fan of the iPhones. But the MacBooks, that's questionable, I think, in my opinion. But, they do have other great products. And I love the way that they try and trap you into the ecosystem, and they're moving over to the services industry as well by offering credit cards. And I wonder if they're going to offer it to European countries as well. I'd love to know what you guys think about it. As Apple is moving over to the service industry, what do you think with Apple? Do you think it's going to soar? Are we going to see, what are your stock price predictions on this? Let me know in the comments down below, and don't forget to smash that subscribe button. Moving over to Energy Transfer is another stock that I have added to this week, and if we look on the month, it has actually done a tremendous job. It's up 24.16% on the month, which is actually absolutely incredible. Looking at it when it was at 6.89, I feel like I should have just gone in and just purchased as much as I can then. But we all make judgments, and usually I buy in stages, buy a little bit now, and this is the time where I should have just dumped all my cash in this one. But it is. I do think it's going to hit around $10. I think some of the predictions are around $15. So that's just my opinion. Obviously, do your own research. But I've got 450 shares now. Average price is at $7, so it has crept up a little bit as I've been buying it at a much higher price. Total amount is valued at is £2,735.51p. I'm up £414.99p. That's 17.88% in the green. So, I am actually really happy with this, and it does pay me on a quarterly basis. So, I'm pretty happy with where this is going. And I do think as the economy does pick up in America, that we are going to see Energy Transfer kind of return back to somewhat of its normal pre-pandemic pricing, or at least get somewhere close to that. At least it's heading in the right direction based on last month's performance. So I'd love to know what you guys think about Energy Transfer. Is it something that you would buy now, or and if you do, what price would you start looking to sell at? Let me know in the comments down below. Moving over to Main Street Capital is another one that has actually been doing really, really well. It's up 11.47% on the month, which is absolutely great. And it's almost hitting $39. I'm pretty happy with this. I'm really, really happy actually. I've got 90 shares at the moment, and it pays me a really good monthly dividend, around $15 a month. So I do want to buy another 10 shares just to make it a nice 100. Average price at the moment is $34.83. I'm up £216.87p. That's 9.89%. I personally do think it's going to hit around $42, $43 in the next 6 months. These are just my assumptions, and I'd love to know what you guys think about it. Moving on to Realty Income is another one I've added maybe half a share to this week. And so yeah, it's at $62.95. I've got 26 shares at the moment. That's average price is $60.01. I'm down 3.74%, which I'm not too worried about. It pays me around $5 a month at the moment. So, you know, I'm pretty happy with that. And it's something that I'll be looking to grow. Walt Disney. I've got 2 shares, just over 2 shares now, currently at £283.96. Average price is at $152.65. And the reason why I purchased this, well, returns at the moment is £55.61. That's 24.36%. And the reason why I purchased or have been increasing my Disney position lately, and that is just because I feel like, you know, Disney Plus has actually got really, really good over the last 3 or 4 months. They've got a bunch of movies from that Star platform. I don't know if they've acquired it or if they've partnered with it. I'm not 100% sure, but you know, the content there is not just Disney now. So I feel like it's a real competitor to Netflix. All we're just hoping for is maybe normal movie stuff like action, you know, TV shows, etc., that are not Disney, more like Netflixy type titles. I think then it would be like a real competitor. But at the moment, they've been doing really well with the subscriptions, and they've been beating every single forecast that they've initially projected. So I think, you know, I think once the parks open up and things do go back to normal, I think this is definitely going to jump up to like $300 stock, in my opinion. Obviously, you know, as the usual, this is not financial advice. This is just my opinions and entertainment purposes only. So obviously do your own research. But I do think it'll probably be hitting around $300, and is something that I do want to be buying into, at least have a few shares in this. And I'll kind of wish I purchased a few more at an earlier stage when it was slightly cheaper. But, you know, things do happen. So, yeah. So let's dive into how has my portfolio performed against some of the indexes. So let's dive into that right now. So I'm going to go here. So just to clarify, so in my trading 212 ISA, my top 4 positions are Energy Transfer, Main Street, Realty, and Boeing, which is actually really interesting as they are all US stocks. So that's kind of like being an eye-opener for me, and I do think I should have at least one UK stock in my top 4. Well, National Grid, I think, is in 5th place. Yeah. So moving over to the week's performance, essentially, it's at 4.04%, which I'm actually really happy with. I think that is a decent return for the week, considering it's been pretty positive, I think, even though we did have a little dip midweek, I think, but overall it is doing pretty well. So now let's compare it to the S&P 500. So with the S&P 500 now, the index, if we look at the last week, it is at 2.64%, which is actually pretty decent, I think. So I'm pretty happy that I've managed to outperform the S&P 500 this week. And if we look at the FTSE 100, the FTSE 100 index is up 1.97% on the week. So happy with that. And it has been doing pretty well. And it's good to see that, you know, the FTSE 100, the S&P 500 are both up overall. And then let's look at the FTSE 250. And the FTSE 250 is up 2.6% overall. So yeah, it's good. I think across the board, they've been up, you know, pretty well. Going forward, what index would you like me to benchmark my portfolio on? Would you prefer it to be the S&P 500, the FTSE 100, or the FTSE 250? Let me know in the comments down below. What I want to share with you guys is how my dividends have grown since I started investing, or since I've opened the Trading 212 account, which I believe was around September 2019, I think it was. So this is basically just the Trading 212 ISA account. And in 2019, I received a total of £6 in dividends. 2020, I've received a total of £200 in dividends. And this year, I've received a total of £90 in dividends just from the Trading 212 ISA. So I think that's that's pretty decent. I'm pretty happy with it. And you can see month on month, like how it's been slowly growing. And my highest dividend month from this portfolio has been November 2020 at £53.95. But then when we look at in terms of growth over a 12-month period, so this from November 2020, the past 12 months had generated £185 in dividends. But then if we look at a 12-month period from February 2020, £276.40. And this is just to give me an idea of what to expect over the next 12 months based on the previous 12 months. So it just adds up the last 12 months from that date to give me a rough idea of, what the growth has been and what I can expect to see in the following year. And it's just a rough estimation of past performance. Things do change, like we did see in 2020 where the pandemic hit and a lot of companies did cancel their dividends. But it's just good to see exactly what you can be expecting. So based on last month, I should be expecting around £276 in dividends based on the previous 12 months. So it's just a good insight to see this bar chart grow. And, it just makes me feel like I'm accomplishing something. And it just kind of shows that if you keep investing, it does go up. But obviously, do your own due diligence and your own research before you make any investments. But I thought I'd share that with you guys since I haven't done that for a while. So back to the portfolio. So with Lloyds Banking Group, I'm a little bit on the fence with this. So I'm not really sure, should I be holding or should I be selling? I do want to sell, but then I think there is some opportunity here for some growth. I've got 1,400 shares at the moment, and I'm up 9.02%, which is about £57.57. So they did announce a dividend for £0.005 per share, which isn't, groundbreaking, but it's still something, it's better than nothing, to be honest. So I'd love to know what you guys think about Lloyds. Do you think it's still a buy, or would you consider it as a hold or a sell? I'm just keen to know what you guys think about it. So this is kind of the one that I'm kind of considering potentially I may be getting rid of. I haven't quite decided yet. And the other stock that I want to talk about this week, actually, there's two more stocks that I want to talk about this week. So with Cloudflare is actually has had a bit of a mare this week. It did hit lows of around $61, and then it's just seen a huge jump back. So I was just wondering, did any of you actually buy in that dip for Cloudflare? And if you did, are you still holding, or what is your predictions for it? Like, what's your game plan for Cloudflare? Would you be holding for the long run, or have you got a certain goal for it to hit and then you will sell it off? I'm just curious to know what you guys think about it, because for me personally, I'm in it for the long run, and I'm looking at it and I'm debating on whether to increase my position in Cloudflare. I know I should have done it when it hit the lows down here, but I'd love to know what you guys think about it. I'm actually debating on whether to buy a few more shares in this, and it's just purely down to I really, really like the company. I use it on all my websites. Well, I say all my websites. I only have two. And one of them being Inkmattic.com. Head over to the description or head over to Inkmattic.com. Check it out. Let me know what you guys think. By the way, I've updated my Freetrade review. If you're interested, a link is also in the description. Don't forget to follow us on Twitter at Inkmattic. So yeah, I'm really debating on whether I should be buying a few more and just because I'm kind of on the fence with it, and I'm thinking, you know what, I'm actually really, really tempted. So I might be buying a few more shares in Cloudflare. The next one I want to talk about is CCIV. So CCIV has had a bit of a good week. It is up 9.88% from its lows, which isn't too bad. I'm pretty happy with it. I've got a total of 3 shares now, average price at $28.85, and I'm only down £4.04, which isn't too bad. So yeah, I think, it's kind of one of my riskier stocks or riskier plays. Usually most of this is purely geared towards dividend and a little bit of growth. but majority of it is dividend focused. I'd love to know what you guys think about Churchill Capital, CCIV. Do you have it in your portfolio? What's your thoughts on it? For me, if I'm honest, it was just kind of like spur of the moment. I saw a massive drop and I was like, and I was watching another YouTube video, and it kind of just like, I kind of bit the bullet and just purchased one share, and then it dropped and I was like, you know what, I'm going to average down, buy another one, and then buy another one. And then I'm like, hang on a second, let's just hold, let's cool the jets here and just calm down. So I've got 3 at the moment, and yeah, I'm just going to ride this one out and see where it goes. I don't really have that much of a game plan for Churchill Capital. I think if it goes to 40, I might sell one, and then 60, probably sell another one, and then 70, I'll probably sell the other. That's just what I'm thinking, but I haven't really decided on a strategy on that yet. But actually, hang on, before we go, there is one thing that I want to talk about, which is this fee that Trading 212 has introduced. I did mention it in my last video, but I didn't really go into much detail. So today I do want to go into a little bit more detail. So for example, let's say we have £1,000 for an example, yeah, and let's say we invested that into let's say Apple. That would cost you £1.50 in conversion fees. So now let's assume you do 10 trades a month. That's going to cost you about £15 for those trades, assuming that you do 5 buys and 5 sells. It's going to cost you about £15 a month, assuming that every buy or sell is at £1,000. It may be worth having a look at other platforms. I'm just curious, because at the moment for me, it's not really making much of a difference because I've pretty much got a buy and hold strategy. So buying and selling frequently isn't really much of an issue for me. So as it's an ISA, it's for the long run, and it'd be like long-term stocks. But I'm just curious for some of you that are buying and selling quite frequently. So you'll be paying this FX charge when it comes into effect next month. So that's 0.15%. So I'm thinking, if you do buy a lot, is it worth looking at other platforms instead of Trading 212 or Freetrade? Because I know Freetrade, the fee is 3 times what Trading 212 will charge. Maybe another platform might be an option, because I know with stake it's 0.5% when you add funds, and then as the account is in USD, you don't have to pay that conversion again. And I think it's the same with eToro. Is there any other platforms that you guys would recommend checking out? I'm interested to know. Leave a comment down below on what you think, or what's worth checking out, because I am curious to see what other platforms don't charge you FX fees for international stocks, or if there is one that still doesn't charge. It's just kind of something that's been playing on my mind, and I'd be interested to have a deeper look into. So let me know in the comments down below what platform you would suggest to check out. And yeah, that's it for this video. Let me know in the comments down below what you guys think. How's your portfolio doing? And don't forget to smash that subscribe button and like this video. Don't forget to follow us on Twitter, and check out the description where you can get 4 free shares when you sign up to using my referral links. Don't forget to like, comment and subscribe, and see you in the next one.